Hey everyone, welcome back to Corporate Decoder. Today's corporate story is about a company that got a little too close to the stock market sun and is now trading in a different neighborhood. Don't worry, we'll decode what that really means. It's Vaxart and their stock rollercoaster ride may be over, or they might pull a magic trick. We will see, and if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. This story begins on July 8, 2025, when things took a turn for Vaxart. Vaxart, a company focusing on oral vaccines, received a notice from Nasdaq, the stock exchange, saying they were going to be delisted. Delisting is kind of like getting kicked out of a club. It means Vaxart no longer met Nasdaq's requirements to have its stock traded there. The main reason, their stock price was too low for too long. Think of it like a store having a clearance sale that never ends. Eventually, the mall management steps in. This all happened because they failed to meet something called the minimum bid price requirement. This rule basically says a company's stock has to stay above a certain price. In Vaxart's case, it was too low. Staying above water is important for investors' confidence and the exchange's reputation. Trading of Vaxart's stock on Nasdaq was halted on July 8, 2025. Suspended means it was paused or stopped temporarily. It is like turning off the lights during a performance. Since that day, Vaxart stock has been traded on the OTCQX Best Market, which is of the OTC Markets Group, under the ticker symbol VXRT. The OTCQX is like a different, less exclusive stock market. It has fewer requirements than Nasdaq. The company appealed Nasdaq's delisting decision in early July, hoping to get back on Nasdaq. An appeal is like asking the principal to reconsider your suspension. The stock remained suspended during this appeal while they were waiting for a response. On the same day, July 8, Vaxart announced that its common stock has been approved to trade on the OTCQX Best Market. The announcement was made in a press release, which is attached as an exhibit to this report. Ted, now let's analyze what this move from Nasdaq to OTCQX means for Vaxart and its investors. A move to the OTCQX can have several implications. On one hand, it provides a place for the company's shares to still be traded, which is better than nothing. It keeps the company alive and allows investors to still buy and sell shares. On the other hand, it can affect the visibility and credibility of the company. Nasdaq is a big name. When a company is listed there, it gets more attention from big investors, analysts, and the media. Being on the OTCQX is like moving from a main street store to an online store. It is still there, but fewer people may stumble upon it. This move could also affect the stock's liquidity, meaning how easily the shares can be bought or sold without affecting the price too much. Generally, stocks listed on major exchanges like Nasdaq are more liquid. This is because there are buyers and sellers and there are generally more trading activities. On the OTCQX, there may be fewer participants, which can lead to larger price swings. OTCQX has less strict requirements, which could be a good or bad thing. It could allow smaller or riskier companies to still be traded, but it may also make it less attractive to some investors who prefer the stricter oversight of exchanges, like Nasdaq. More liquid. This is because there are maybe fewer participants, which can lead to larger price swings. OTCQX has less strict requirements, which could be a good or bad thing. It could allow smaller or riskier companies to still be traded, but it may also make it less attractive to some investors who prefer the stricter oversight of exchanges like Nasdaq. Now, what could all this mean for investors? The delisting from Nasdaq and the move to the OTCQX could create uncertainty. Investors might worry about the long-term prospects of the company now that it is trading on a less prestigious market. Let's think about the context here. Vaxart is in the business of developing oral vaccines, which is innovative but also risky. The company needs access to capital to fund its research and development, and the stock price is linked to that. A lower stock price can make it harder for the company to raise money. This is because they have to issue more shares to raise the same amount of funds. This is a difficult situation for the company. So based on the filing, Vaxart is facing a challenging time. The delisting from Nasdaq is a setback. Although they are trading on the OTCQX, this is not the same as being on a major exchange. Therefore, keep a close eye on how Vaxart manages its finances, how it progresses with its vaccine development, and whether they can turn this situation around. Alright, that's our breakdown of Vaxart's situation. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.